What up, guys? It's November 2nd, and we're going to go over Corsair earnings presentation, conference call, and earnings report numbers, all right? So they reported earnings this morning at about 5 in the morning, so got up like a zombie, listened to the call, and got disappointed like every other Corsair shareholder out there. But of course, we know what's going on. We know what's up. But before we get started, hit that like button, please, very gently, very slowly, okay, and carefully. And also that subscribe button, very, very nicely, very gentle. Don't hurt yourself. But if you want to join the Stock Gladiators Discord and do battle in the arena with us, the battle that is individual stock picking, let me know. I'll shoot you the link. Also, it'll be tagged here on the pinned comment below. All right, so let's get going. So, of course, Corsair is a stock that I do own. I own about 650 to 700 shares over two different accounts. My personal account, that's the big dog, and my 401k, which is kind of slowly building up, nice and easy and slowly. So the cost bases are about $28 in my personal and about $30 a share on my 401k. Totally fine still building these positions. Not worried at the moment for the short-term action of the stock, but I want to go over these numbers. I want to explore what happened, so let's get to it. So here we go, guys. So, of course, the earnings numbers right here. They're reporting EPS, that's earnings per share, revenue, and forward guidance. So, the EPS, 16 cents versus the Wall Street's expectations of 23 cents per share. So, that's a big, bad miss. Not good, not solid numbers. That is definitely a negative for Corsair. Revenue is in line, 391 million versus 391 million expected. Just a little bit more than the expectation. It means it's in line with the street's expectations. Forward guidance, this is a little bit tricky because they already reported in the prior 8K filing that they wanted to reduce guidance because of the supply side issues, because of the shortage of GPUs and supplies and logistic problems, and they were taking down their guidance, their forward guidance to 1.82 to the range of 1.92 billion in this year, 2021. So essentially, guidance is maintained as previously stated. Okay, so I think this is a good chance to go over the earnings presentation because it's going to show us all the numbers we need to know, their guidance, financials, and kind of what's good and what they're thinking about the coming quarters and the future of Corsair. And of course, it starts here with disclaimer, very normal, and Q3 product highlights. And of course, they're going to start with the positive, which is the rate of innovation at Corsair. They've created, and this is on the conference call, they've created more than 100 products this year alone. It comes out to be a little bit over 2 a week of new products in the market. So the rate of innovation is still pumping, still good. There was one of the analysts that asked about the rate of innovation, and the CEO said, no, we're still very much innovating into expanding our product categories and making our products better. That's always a positive, in my opinion. So definitely starting here with a positive, and I think it's one of the only positives. Also, they talk about debt. We'll talk about that in a little bit as a positive, but let's go over this here. So, I'll show you guys here the Elgato face cam. Okay, this is what I'm using right now to stream and show you guys. This is me here using the Elgato face cam, and my room right now is very much dark. Okay, it is very, very much dark, and it's capturing a lot more light than I'm actually looking at with my eyes. So this camera is fantastic. It gives a nice, smooth image, which I love, and I think it's at a decent price compared to other high-performance face cams or cameras for your computer. Very happy with the Elgato face cam. Nothing bad to say about it at all. The one positive thing here is that they're entering a $1 billion market cap business when it comes to these webcams and advanced webcams. So I think they're going to do just fine with that. Another new category is the gaming monitor that they introduced, the Xeneon QHD 165 32-inch high refresh rate, AMD FreeSync compatible gaming monitor. And that's important that it's AMD FreeSync because AMD is one of the leaders, if not the top or, tied for leader with NVIDIA for graphics. And when a monitor is compatible with one of these two companies, that's a very good thing. Okay, so I think this is another Total addressable market, they're saying here $4 billion. I'm not sure whether that's true or not, but I tend to believe it for gaming monitors and gaming setups. That's going to be another thing that they can sell in the next coming years very well. Here they're mentioning their new DDR5 RAM memory sticks, okay? And then these are very fast memory sticks, DDR5. That's new technology, of course, coupled with their lights and everything. But also here, they're not mentioning that their CPU cooler block with the LCD screen that you can personalize for computer builders. And of course, these are water-cooled CPU blocks, which I have one here for my computer. I am a custom builder. I custom build my computer with the help of a good friend. Shout out to John, my good friend, who helped me with my computer. And it's a fun thing to do. And it's fun to do it right and to make your computer look awesome. And that's something that Corsair, I think, captures very, very well. But of course, they're not, or gamers or people like myself that like to build computers, we're not able to do that because we don't have access to video cards and reasonably priced video cards. So we're going to stave off those purchases until the supply of video cards is back normal on the market. Now, this is a little bit of a positive too. The Scuf controller. Scuf is a brand that Corsair acquired. Very good brand. And this is the end here of their product line. But I think that they should also mention their IQ software. I think their IQ software for Corsair is very much underappreciated. Let me show you an example here. And here I want to show you just a little example here of how this IQ software works, because I think it's an amazing piece of technology that makes computer gaming even more immersive than it is today. So this for gamers is just sick, and I think it's a great selling point that all these peripherals can work as one and deliver that flawless gaming experience, an out of this world gaming experience. Okay, so now moving on to the bad. Okay, this is now the bad with a little bit of good at the end, sprinkled there at the end. So the financial results, and we see here the revenue data by segment. They're splitting their segments into two segments: gaming components and system, that there's computer builders, and then gamer and creator peripherals, that's your face cam and your Xbox controller type of stuff, keyboards, mouses, and so on. So these charts here could be a little misleading at first because they're comparing quarters, quarter 3 of 2019 versus quarter 3 of 2020. You can see here there's some very decent growth that is happening here in those segments. But of course, that growth goes away when you compare these two quarters, Q3 2020 to Q3 2021. Now there's no growth. There's actually negative growth, which is a huge negative. This one here, this chart is a 9-month end chart. So it's measuring a year to date of 2019, 2020, and 2021. So from the beginning of the year until today, what is the growth rate? And here I think is a little bit misleading because in 2021, the first and second quarter were decent quarters. They were not bad quarters. And this kind of growth rate here is slowed down, if you notice here, versus the prior 9-month ended 2019 versus 2020 comparison. So it's a little bit misleading. They're trying to show growth in some way, which is fine. But at the same time, the numbers aren't good. So I don't know why they do stuff like this. And this chart is sort of the same thing when they're talking about gross margins. Of course, gross margins are the amount of money they're actually pocketing from their sales. The amount of money. So if they sell something worth $10 and it costs them, $8 to make, their gross margin is $2. So here they're showing some great growth from 2019 to 2020 year to date. Here you see that slowdown of growth. I mean, look at that slowdown of growth there. It's just crazy. So yeah, the numbers are not good. And here, quarter over Q3 of last year and Q3 of this year, you guys can see the numbers are just negative. Those margins are being squeezed by these supply issues because they're not able to pass on these costs onto the consumer because they have no real pricing power in this sector of sales, okay, or in this kind of business segment that is computing and peripherals. And what I mean, of course, by pricing power is it's very hard for Corsair to raise the price of their Elgato face cam by $20, $30 to help their margins if a potential buyer is going to say, do I buy the Elgato face cam for $230 versus this Logitech product that is maybe $40, $50 cheaper and it gives me just slightly less quality. So that is what I'm talking about. Pricing power is companies that cannot price their products higher because competitors will just eat into their market share. So here you go. Here's the full picture of the Q3 results. And here, let's forget about this stuff here, because all that stuff, forget about that, okay? We're going to focus on the year-over-year, Q3 2020 versus Q3 2021. We see pretty much every single category is down. Net revenue, gross profit margin, operating income, net income, everything is down year over year, which is very, very negative. But I think that it softened the blow for Corsair to come out in early October and say, hey, our numbers are not looking good, so just be prepared. That caused a 10% drop in the price of the stock and gave us an opportunity to evaluate and become buyers of the stock. And here, of course, worth mentioning stuff that we already know, okay? They're saying gain market share. Not sure about that gain market share kind of reference there. But we know that GPUs curtailed the demand for new PC builds. We know that very well. And higher logistic costs, including ocean and air freight, had an impact on their margins, resulting in gross profit margin of 25.9. So this is something that I think next year will be fixed. So we'll talk about that in a second and how this may be an opportunity for the future. So moving on here, we're going to go over growth guidance, and they're talking about the guidance here. This is the same thing that we talked back on October, so this is pretty much in line. They didn't decrease it further. This was already decreased back from October, the beginning of October, so no surprises there. The guidance is maintained like we indicated in the beginning. And moving on here to the last point that I want to make is the debt summary. And I think this is a little bit of a sprinkled positive there. Not extremely positive, but positive nonetheless. Okay, so they're refinancing debt. They're saying, hey, we're reducing our interest rate. We're refinancing. We're getting cheaper debt, which is going to save us about $2 million a quarter, which we can allocate to research and making new products and investing in logistics infrastructure for the future. I think that's important. That's a good move, okay? So they're talking about how they're going to reduce debt over time, which I think is great. They need to do that, and it makes their stock more enticing to potential shareholders when they do that. So, okay, guys, so what is my kind of final take and conclusion over Corsair? So, Corsair is a stock that I think can be bought. I'm still buying this stock. I'm still a buyer, a net buyer of the stock when the opportunity presents itself, when the weakness happens. So right now, weakness to me is under $25 a share for weakness. Extreme weakness would be anything under $24 a share. That would be extreme weakness on the stock based on the valuation of about $2 billion to $2.3 billion at the moment. So I'm looking at this stock with eyes on Q3 and Q4 of 2022 when these logistic issues have dissipated and PC builders can actually build their PCs and people don't have to compete for space in cargo ships and trucking fees that are much higher than normal. I think that I would love to own the stock in that type of environment, which I think comes later. So I think this is all temporary. So ask yourself, do you want to own the stock when these issues are gone? Or do you want to own the stock when the issues are here and the stock is pricing it in at a lower level versus 6 months to a year from now when these issues are gone and the stock has shot upward or northward, essentially, hopefully, of course, knock on wood. So make up your mind. What do you want to do with this stock? That's just my suggestion. That's my take on it. Okay, I've gone far enough for today. Peace out, guys.